Hello everyone, good afternoon. Sage here live from the Kalkine studios and you are watching the Market Movers. Let us zoom our lens on the market performance today and the drivers under the spotlight. In today's show, I will take you through the top gainers of the day. So let's get started, beginning with the Australian share market. Extended gains on Friday, buoyed by technology stocks as Wall Street recovered amid pickup in US job growth this month. The domestic equity benchmark ASX 200 scripted its best outing in nearly 2 weeks, after trading flat this week. IT stocks are moving northward as investors turned focus towards the growth-oriented technology sector. And the tech stocks rallied nearly 4%, their highest in over a week. Australian technology shares seem to be closely tracking a rebound on Wall Street as markets recovered from the recent sell-off, stimulated by cryptocurrency crash. And while investors need to take a cautious stance in taking exposure to this space, signs of surging inflation have bolstered bets that the Federal Reserve may tighten its monetary policy soon, and that may further put pressure on rate-sensitive growth stocks like technology shares. The healthcare stocks also traded on a strong note, up over 2% to touch their highest level in 3 months. However, miners and energy sectors are trading in negative territory, capping the overall market gains. And energy stocks fell as crude fell on concerns over the rising COVID-19 cases in Asia. In addition, progress in the Iran nuclear deal is expected to add to the crude oil surplus that may squeeze oil prices. And Brent crude fell 2.3% to close at $65 US a barrel, while the West Texas Intermediate crude ended the session down by 2.1% at US $62 a barrel. It seems to be a challenging day for the Australian energy producers, such as Santos Limited, Beach Energy, Woodside Petroleum and Viva Energy Group to hold their ground. And despite the recent retreat, the fundamental outlook for crude oil seems to be ruling in favour of price uptick amid an ongoing recovery in global oil demand. Next week will be crucial to the energy theme, and iron ore prices are under pressure after China sought stricter supervision of commodity markets to curb the unreasonable price increases. September contract of iron ore futures on the Dalian Commodity Exchange closed down by 5.7% at 1,142.50 yuan per tonne, and Australian mining giants such as Rio Tinto, Fortescue Metals Group Limited and BHP Group Limited are trading with a downward bias in today's session. Notably, Kogan.com fell the most on the benchmark, falling nearly 13% after the online retailer slashed its profit forecast, citing issues with supply chain and inventory amid higher warehousing costs. And now, let us look at the top gainers on the ASX 200, driving the ASX 200 towards a positive close. Let's begin with the stock of the financial services company EML Payments Limited. Extended its gains to Friday and surged over 17% to the intraday high of $3.42 Australian. The demand of the stock increased after tremendous selling pressure witnessed on Wednesday. EML Payments was the top loser on the ASX on Wednesday, tumbling over 44% after the company in an exchange filing said that the Central Bank of Ireland, or CBI, may take actions to restrict its Irish subsidiary. And PFS Card Services, or PCSIL, notably contributes 27% of the group's global revenue. The CBI's concerns relate to PCSIL's anti-money laundering, counter-terrorism financing, risk and control frameworks and governance. In addition, Macquarie Group has retained outperform rating on the shares. However, the broker has cut down its price target on the stock to $4 Australian as per information from Refinitiv. And moving on, the stock of the food and beverages company, the A2 Milk Company Limited, soared just over 7% to $5.59 Australian. The stock gained after a note by UBS said that there are signs the company's turnaround was working without any brand damage. And the global brokerage has a buy rating on the stock. The company's stock has remained under pressure so far due to its expectations of lower earnings in the financial year 21. The next market mover to take a note of is technology company Xero Limited, that climbed nearly 6% to 129 Australian dollars 12 cents. The stock gained after its peers listed on the tech-heavy Nasdaq gained in value overnight, and investors are also lapping up the stock amid companies' plans to boost its investment in R&D to capitalise on a large global market that is underpenetrated. And the coronavirus pandemic has also accelerated the adoption of cloud software. Then the travel players are occupying the next two spots in the ASX 200 gainers list, beginning with the stock of the digital travel business firm Webjet Limited surged just over 5% to the day's high of $4.91 Australian. The stock surged after analysts at Goldman Sachs said in a note that Webjet shares are in the buy zone, and the stock was under pressure earlier after Qantas Airways had announced plans to cut travel agent commissions for international flights to 1%, down from 5%. Next travel player under the spotlight is corporate travel management. The stock of the global provider of innovative and cost-effective travel solutions. Corporate travel gained over 4.5% to $19.39 Australian. And the stock was down on Thursday after Qantas Airways announced a commission cut. However, investors on Friday seem to have focused on the other positive update by Qantas, which revealed that a sustained rebound in domestic travel demand was continuing to drive the airline operators' recovery from the COVID-19 pandemic. And Qantas also expects to be statutory free cash flow positive in the second half of financial year 2021. Moving on, let us now zoom our lens at the retail sales data out today, reflecting the strong economic prospects. Australian retail turnover rose 1.1% in April 2021 and seasonally adjusted, according to preliminary retail trade figures released today by the Australian Bureau of Statistics, or ABS. Turnover rose 25.1% when compared to April 2020. And the sharp rise in annual turnover is due to the very low levels of retail turnover recorded in April 2020. Nationwide coronavirus restrictions in April 2020 saw physical stores closed for all but essential retail and restrictions placed on people leaving their homes. And Ben James, Director of Quarterly Economy-wide Surveys, said food retailing led the rises in April, following falls in both February and March 2021. All industries except department stores rose, with similar rises for cafes, restaurants and takeaway food services, household goods, retailing and other retailing. Thanks so much for joining us on that report. That is all for now. Stay tuned with Kalkine TV for more live market updates, and we will be back with more news on the markets, economies, diverse themes and sectors. Sage signing off.